The accounting error that Nike made could have serious consequences for its financial performance and reputation. According to some reports, Nike made a mistake in calculating the cost of goods sold for some of its products, resulting in an overstatement of its gross margin and net income. This error could affect several aspects of Nike's financial statements, such as revenue. If Nike has to restate its revenue to reflect the correct cost of goods sold, it could lower its revenue and growth rate for the affected periods. This could disappoint investors and analysts who expect Nike to maintain its strong sales momentum. According to Macro Trends, Nike's revenue for 2021 was $44.538 billion, a 19.08% increase from 2020. Expenses. If Nike has to adjust its cost of goods sold to correct the error, it could increase its expenses and reduce its profitability. This could hurt Nike's margins and earnings per share, which are key indicators of its operational efficiency and financial health. According to Nike Inc., Nike's gross margin for the fourth quarter of 2021 was 45.8%, up 850 basis points from the prior year. Assets. If Nike has to write down the value of its inventory or accounts receivable to reflect the error, it could decrease its assets and weaken its balance sheet. This could affect Nike's liquidity and solvency ratios, which measure its ability to meet its short-term and long-term obligations. According to Nike Inc., Nike's total assets as of May 31, 2021 were $34.8 billion, up 15% from the prior year. Liabilities. If Nike has to pay fines, penalties, or settlements to regulators, customers, or suppliers as a result of the error, it could increase its liabilities and strain its cash flow. This could limit Nike's flexibility and resources to invest in growth opportunities or return capital to shareholders. According to Nike Inc., Nike's total liabilities as of May 31, 2021 were $18 billion, up 9% from the prior year. Equity. If Nike has to reduce its retained earnings or issue more shares to cover the impact of the error, it could decrease its equity and dilute its shareholders' value. This could lower Nike's return on equity and book value per share, which reflect its profitability and net worth. According to Nike Inc., Nike's total shareholders' equity as of May 31, 2021 was $16.8 billion, up 24% from the prior year. The accounting error could also have negative implications for Nike's stock price, customer loyalty, and legal liability. For example, stock price. If Nike has to revise its financial results or guidance due to the error, it could trigger a sell-off in its stock price and erode its market capitalization. This could damage Nike's reputation and credibility among investors and analysts who rely on accurate and timely financial information. According to Macro Trends, Nike's stock price as of October 29, 2021 was $159.97 per share, up 14% from a year ago. Customer loyalty. If Nike has to recall or replace any defective or mispriced products due to the error, it could lose customer trust and satisfaction. This could affect Nike's brand image and loyalty among consumers who expect high-quality and fair-priced products from Nike. According to Statista, Nike's sportswear category generated approximately $15.1 billion in revenue in 2021. Legal liability. If Nike faces any lawsuits or investigations from regulators, customers, or suppliers due to the error, it could incur legal costs and damages. This could expose Nike to reputational and financial risks that could harm its long-term growth prospects. According to DG Statement, some users have reported an error code on the Nike website, an app that prevented them from making purchases or customizing orders. Therefore, the accounting error that Nike made could have a significant impact on its revenue, expenses, assets, liabilities, and equity. It could also affect its stock price, customer loyalty, and legal liability. To avoid such consequences, Nike should take swift and transparent actions to identify the root cause of the error, correct the mistake, disclose the impact, and prevent recurrence.